Hello and welcome to Turnkey. Thank you for joining me again. My name is Shae and I'm so glad you found this little spot on the internet on YouTube. And today we are going to talk about what not to do before buying a house. This video is intended for those who are new to this process, who have never bought a house before, first-time home buyers who have a lot of questions. And commonly what I say to my friends who I help or those who I meet, it's one of those times in your life where you don't know what you don't know. And that wasn't too long ago for me either. That was probably about 4 years ago. And it can be very scary, overwhelming. And honestly, I just really wanted to make sure that I wasn't taken advantage of in any kind of way, if that was even something that could happen. I like to be the most educated and informed before going into a decision, especially a big one. So this is what that video's purpose and how I'm wanting it to serve for you today. So if you are a first-time home buyer, you're thinking about buying your first home, you are at the right place. Thanks again for joining me and let's get right into it. All right, so before buying a home, there's some factors and some things, common mistakes that I would like to share with you. And that first one being is don't buy a car, new or used, yet. Wait until after you close on your home. The being for this and all these points to follow is because there's a debt to income ratio that lenders look at that can potentially, with more debt, jeopardize your ability, availability, opportunity to secure the loan, but also just how much money the lender is willing to give you to buy a house. The higher your debt goes, that means the less money that you have to go buy a home, potentially within the price bracket that you really want to be in. So again, avoid buying a car before purchasing a home. Wait until after you've closed and you got the key in hand, because we don't want that debt to income ratio to climb and increase. We want that as low as possible. The second often mistake that I see, especially here in Charleston, is changing jobs. And I say especially here in Charleston because a lot of people are transplants here, they move here from somewhere else. So changing jobs, what that does is interrupt the history of your security and stability of income. And when you move to a new place, while lenders here have a lot of experience where they can still pull history of the income that you've been making, and the golden rule is about 2 years, it's still just better to be approved before you change jobs. Even if you're moving here to Charleston or you're moving anywhere, where you're at right now, if you have 2 or more years of employment, don't quit yet. Don't take on a new job until you fully close on a house. Again, the reason for that is because lenders can take a look at the stability and security of your income over a certain amount of time, and they need that proof in order to approve you. Just makes it more difficult and sometimes altogether not even an option to approve you for a loan if you quit or change your job. So again, don't quit your job yet. Keep it and hold on to it. Going in hand with making sure that you keep your job and you have stability and security to prove to the lender, you also during this time do not want to miss any payments. Don't miss any bills. It's important that you have a strong credit history, and any missing payments is going to impact that negatively. Lenders have to have a good credit. Depending on the lender, that can be 620 or above, and in some cases also 580 and above in order to approve a mortgage. But again, in this process, it's just important that you have as strong a credit history as possible. And what that means is one of the ways that you can improve your credit or keep it great and wonderful, good and amazing, is to not miss any payments, especially not during this time. It's also important to note that the better your credit is, the better the interest rate that you are going to get from a lender. So keep that in mind. Now on to the fourth thing that you want to avoid before buying a house is opening new lines of credit. When you open a new line of credit, it impacts your credit score and can lower your score temporarily for a while. And the lower it is, the higher the interest rate that you'll be offered when you are approved or when you apply for a mortgage. With that also, when you get more credit, line of credit, which means you're accruing more debt, it's again impacting that debt to income ratio. And the higher your debt goes, the less that you can qualify for, or you can have a denial on your application altogether. So just avoid opening any new lines of credit during this time. Wait again until after you have that key in hand and you've closed on your home. And the fifth and last thing that you don't want to do before buying a home, and even as you're going throughout the process, so I just want to make this clear, not just before you start talking to a realtor, you don't want to do these things. You don't want to do these things throughout the whole entire 30 plus days that you are looking for a house, you're under a contract, you're doing your due diligence, all that stuff to the day you get the key. Don't do any of these things. And this fifth and last one is moving funds unnecessarily around or even spending large chunks of money unnecessarily. The first point of all 5 of these was to not buy the car. Well, this is an extension to that. Don't go and start buying all of your furniture for your home yet. Don't buy in big chunks. Like, it's a toss-up between, just talk to your lender specifically before you want to purchase something if it's something that will lead him or her astray from being able to verify that you have enough funds in your bank statements for closing costs, reserves, as well as the down payment. That is what we're trying to avoid, to make sure that the verification process for your lender is not difficult, that you are clear to close, and there's no bumps in the road. Again, I want to throw out some advice there. What I typically give my clients, I would not be spending more than a couple $100. I honestly wouldn't even be spending any couple of $100. If I were you, don't put it on your credit cards. Just live as minimally, and as the necessities come up for your normal day-to-day, stick within that realm of what your bills typically are, and you shouldn't have any issues. But again, being that I'm a realtor and I'm not your lender, when you go throughout this process, talk to your realtor and also talk with your lender. Your realtor should be helping you be in connection to make sure that that's clear for you of how much to not be spending during this process until you have that key in your hand. So again, third time, don't spend unnecessarily and don't be moving the funds around from bank to bank. Keep it all together in one place to make it as simple as possible for your lender. And that's it, everyone. Thanks so much for joining me again. This was the things not to do before buying a home. The next video that I'm gonna pop up here in the corner is what to do before buying a home. So go ahead and take a look at that. Again, thanks so much for joining me. I hope all this information serves as a key for you as you're turning over a new part and exciting time in your life. So yeah, let's turn key again real soon. Bye, y'all.